First, let's get some breaking consumer data. It's just crossing, and Rick Santelli has it for us. Rick?
Yes, Dave, we still get some numbers that aren't going through the government. Here's University of Michigan sentiment and the inflation gauges, October preliminary views. 55.0 on headline, a bit better than expectations, very close sequentially to the 55.1 in the rearview mirror for our September final read. And that compares, well, 55.0, you'd have to go back to May of this year to find a lower number. Current conditions, pretty juicy here. 61.0, better than expected, sequentially higher than 60.4. If we look at expectations, 51.2, a little bit of a disappointment in both directions, less than expected, less than 51.7 in the rearview mirror. You have to go to May of this year to find a lower number. Now, the inflation numbers, 4.6 on 1 year, that's 1/10 less than we're expecting and less than the 4.7 in the rearview mirror. 4.6 will be the lowest read going back to February when we were at 4.3. And finally, 5 to 10-year inflation stays at 3.7, both matching expectations and in the rearview mirror. To find a lower number, you'd have to go back to August at 3.5 to find a higher number. You're in June at 4.0 to give you some context there. Very quickly, the government shutdown has caused us not to see construction spending, 2 jobless claims, factory orders, September jobs report, wholesale inventories and sales. However, maybe CPI on Wednesday scheduled at least the 15th of October. It may be released. I'm not sure if that's going to be the day. Think COLA here in terms of the reason why. And finally, on the week, 409 is current 10-year. It settled at 412 last week, down 3 basis points. David, back to you.